Insurance means transferring of risk from yourself to the insurance provider. In this instance, that should be Jubilee.
Yes, Jubilee, the number one, the regional. Clients normally confuse life insurance with unit trusts. So someone saves for just 4 months. They're like, I have a big dream. I want to start my master's. I want to build a house, that dream trip. But the moment they see an accumulation of funds, they want to pull out. And they're like, no, you have to give me my money.
Life insurance, here we're talking about an agreement and the life insurance company. But there should be some money that you're expected to pay on a monthly basis, quarterly basis, or a yearly basis. A unit trust. Yes, it's also a method that allows you to accumulate money. This money, you can access it at any point in time.
Yeah,
and doesn't have a life cover.
Both of them are important in someone's life, but they play a different role. Welcome back to another episode of the Live Free podcast. Here we only talk life insurance and health insurance. Any questions, anything you want to know about your policy and your cover, just subscribe to our YouTube channel and you will get notifications whenever we upload a new episode. But today, we call her our resident Musomesa. Musomesa means teacher. Our training manager, Violet Namayanja Janat, will be explaining in detail what a life policy is, the difference between a life policy and your everyday unit trust that you confuse with a life policy. We're going to break down this for you so that when you're making your next financial decision, you have a proper understanding of what you're taking on. My name is Camilla, Marketing and Communications Manager at Jubilee Life Insurance. Violah, welcome to the podcast for the first time.
Thank you, Camilla. It's actually exciting to sit here with you.
Yes, the hot seat, Musomesa, I have you.
You have me today.
Every day you're training our agents, our team members about these policies, but today we are passing on vital information to our clients.
Yeah.
I want us to clearly explain to our clients the difference between a life policy, a general insurance policy, and a unit trust.
Okay.
Yes.
Thank you.
Because we are masters in life insurance and health insurance.
True.
So we want our clients to understand what we're dealing. Yes.
True. Thank you so much, Camilla.
Yes.
And to our viewers, it's a pleasure to sit here this evening. So when we talk about insurance in general terms, insurance means transferring of risk, from yourself to the insurance provider. In this instance, that should be Jubilee.
Yes,
life
Jubilee, the number
company.
one, the regional.
True.
Yes.
Yeah.
Insurance.
And then when we talk about life insurance, here we're talking about an agreement. It's a contract between the individual and the life insurance company. But there should be some money that you're expected to pay on a monthly basis, quarterly basis, or a yearly basis. That is going to allow you to enjoy the benefits that come with that life insurance policy. When we talk about health insurance, we're talking about a situation where you want to access medical services.
Yes.
There are many hospitals.
Yes. And we pride in having over 300 service providers.
Very true.
Countrywide. So when you're in Gulu, whichever corner of this country you may be, we have a hospital that will attend to your medical emergencies or needs. Yes.
Yeah. So in health insurance, we also have a number of products that we have there. So how does it operate? So it gives you opportunity to access medical services without using cash.
Yes, we take away the burden.
The burden. Let's say, for example, if you're working in Gulu and your family is in Kampala and your child got an emergency, you don't have to rush to come back to Kampala.
Medical emergencies don't alert you. They don't warn you.
Very true. So you just go and access any medical facility present your medical card.
And now we are cardless. You don't need a card
Very
to
true.
access any hospital.
Yep.
What you need is just download the Maisha Fiti app. All your health records, your number, your information is there.
Very
just
true.
walk into the hospital, give them your medical card number, and they will give you the services that you need.
Very true. And that is renewable on an annual basis.
Yes.
And then when you talk about general insurance,
Yes.
that is talking about insurance for those things that don't have life,
Yes.
like cars, plots of land, houses,
Yes.
expensive jewelry, mobile phones, and things like that.
Yes.
Yes.
Okay. So clients normally confuse life insurance with unit trusts. So someone saves for just 4 months. They're like, I have a big dream. I want to start my master's. I want to build a house, that dream trip. But the moment they see an accumulation of funds, they want to pull out. And they're like, no, you have to give me my money. I just want you to differentiate for them. In a layman's, no jargon, just imagine me, a normal person.
Okay.
Difference between a unit trust and a life insurance.
Thank you, Camilla.
They are both of them are important in someone's life, but they play a different role. And we want our clients to understand the difference before we go to dive into the issue of the free look period for clients.
Thank you, Camilla. So when you talk about a life insurance plan,
yes,
minimum term is 5 years.
Yes.
Maximum is 20
years.
Life insurance is long term.
Yes.
It allows you to achieve your long-term
goals,
financial goals. For example, you're looking at paying school fees for your child who will be joining university. You want to go and do your PhD.
Yes.
In your bucket, there are so many things that you're yet to do. But if you look at your daily income, you might not be able to get 40 million just in a month at a go and achieve it. So with life insurance, it allows you to look into the future and plan. That is why our slogan is you live free. So you're planning. You know that in 10 years' time,
there is living and there is living free.
All right. And then when you talk about a unit trust, yes, it's also a method that allows you to accumulate money.
Funds,
but this money, you can access it at any point in time.
Yes.
Okay. For example,
and doesn't have a life insurance.
And doesn't have a life cover. For our life, when you talk about life insurance, there is cover on top of it. So yes, you're saving money. You're looking at 40 million, but on top of the 40 million, there is cover.
Yes.
Should anything happen to you along this journey, this 10-year journey, you and your loved ones are protected.
Yes.
So that is the simplest explanation that I can give.
Violah, free look period. What is that in insurance?
In insurance, when you talk about a free look period, it's actually dubbed 30-day free look period.
Yes.
So I come to your offices, Camilla, on Parliamentary Avenue, or I meet an agent in the field. I sign up for our famous Smart Save plan.
Yes.
For
Olina plan B.
Plan B or Chiringa. So I sign up for 5 years. And so I sign up today. My policy document comes out maybe in 5 working days. They give it to me. So this contract, these days, we no longer give the physical ones unless you want it.
Yes.
But otherwise, we send it. It's an E1.
Yes.
So you receive it in
and
your email.
Net was telling us you must keep it so well.
You keep it. So you open it, you read through it. So from the time you sign up, we count 30 days. Those 30 days is what we call the 30-day free look period. We're giving you time to read through. Did I really understand when Violah was explaining? Or I was just mesmerized by this
terminology.
So I'm like, okay, I've been talking about Smart Save. It's high time I took a Smart Save.
Yes, so
And so maybe this agent was explaining to me and they told me you need to start now in case anything happened. So I was a bit anxious when I signed. So in these 30 days, we're giving you time to read through. Please read. Read through. What did I buy? What is the name of the product that I bought? For how long am I going to have it? In case anything happens to me, what will happen at maturity? In case I die? In case I'm no longer able to pay? In case I accumulate a huge outstanding? Okay? Everything is explained. There are the terms and conditions. So in those 30 days, Camilla, you can actually say, Violah, I don't want a smart save. When I was walking on the street, I saw venture. I want venture.
Yes.
We can change for you.
Okay.
Then along the way, you're like, Violah, I had said 100,000, but now I think the dream is bigger. I want to, I think I can put aside 300,000.
That's the period.
Yeah. We can change in those 30 days.
Yes.
We can increase the amount of money. We can increase the term. We can even decrease. Well, we can also decrease after the 30 days.
Yeah.
But what is particular in the 30 days, the 30-day free look period, we can change the product. We can increase the amount of money. We can increase the term, the policy duration. Okay. And then maybe in that period, the beneficiaries that you listed, you realize that, okay, well, I had put one beneficiary. I think I can put another. So those are the first 30 days that you're given to make changes, to alter, or to even say, I think I don't want it. And then we shall give you your money back. It's a refund, a total refund.
Because it's important for you to take on a policy that you're able to service, to enjoy all the benefits that come with it to maturity. True. But it's at this point that, Violah, when someone is taking on a policy, there are those things we call riders. What are they? And how do they allow a client customize a policy to their needs? Yes.
So, Camilla, when you buy your mobile phone, they don't give you that cover.
No, I have to protect it with that screen guard. They don't give you that
screen guard.
No.
So that you buy your very expensive phone, but without a cover, without a screen guard, but you can still use it.
No, I have to have these things.
There are some individuals who still use their mobile phones without
the risk is high.
Exactly. That's what a rider does.
Yes.
That rider brings out the real meaning of insurance.
Yes.
That what if my phone falls down? What if I fall sick? What if I lose my job? So you have bought life insurance.
Yes.
It's for 10 years.
Yes.
And we are looking at the policy coming to an end, or unfortunately something happens to you. So they are in the middle. The policy term has not yet come to an end. It's a 10-year term. It can even be a 5-year term. Maybe you're just in your second year. Unfortunately, you fall sick. You get an accident, and then you become totally and permanently disabled. In this situation, it is you can no longer do what you used to do to earn you an income. What does Jubilee do? Without the riders, nothing. So the riders bring out the real essence of insurance. The what if I fall sick? What if I am not able to pay my premiums anymore? I'm not yet dead.
It's an extra layer of cover.
It's an additional benefit, but it comes at an additional cost.
Yes.
And it is optional. It is optional. So when you buy your Smart Save plan, it's always important to add the riders, because there you will fully be covered. Just little money. Just little.
So just for that little money that you're emphasizing, what can you give us examples of these two particular ones that people should look out for?
Okay.
I hear hospital cash.
We have what we call hospital cash benefit for one of our products called the Jubilee Invest Plus plan. So this hospital cash benefit is different from medical insurance. So it looks at our client who has been hospitalized for more than 3 days. Inpatient. You must have been on that hospital bed for 3 days. That means that this client is really sick. So 3 days, you're hospitalized. So each night that you spent in hospital is 100,000.
When people retain themselves in hospital to get this money.
Camilla, you cannot be in that hospital if you're not sick. Okay, and remember, this is a reimbursement.
Yes.
You first come out of hospital, and then with the help of your agent, you submit the discharge forms, because we need to look at the circumstances under which you are hospitalized. Okay. So each night that you spend in hospital is 100,000. So in a year, we give you 25 nights.
Okay.
That is 2.5 million. Yeah. So it's a rider that takes away that burden.
Isn't that a lot?
It's a lot. But remember,
you're enjoying.
It's a benefit. It's that what if scenario.
Yes.
I'm hospitalized, and then my hospital bill comes out, maybe it's 7 million, and I only have maybe 3 0.5, and so we are able to give you the 2.5, okay, to top up and then clear your hospital bill. But it's a reimbursement. You have to first come out of hospital and then you process that payment. And the other rider is called waiver of premium. So the word waiver simply means exemption. So Violah has become hospitalized.
Not working.
Violah is no longer working.
Lost her job.
She lost her job, but it must have been as a result of illness or permanent disability. So you're not able to pay your premiums the way you are paying them. Remember, insurance is transferring of risk from yourself to the insurance company. So now something terrible has happened. You're not able to continue paying your premiums. Okay, so that rider comes in to exempt you from paying the future premiums. For example, if my policy term was for 6 years and I've only paid for 3 years, that means I still have 3 more years
to go.
If I don't pay my premiums, the policy is going to lapse. And remember, we say when a policy is in lapse, chances are very high that you will forfeit all your benefits. So when you pay for this rider on a monthly basis or half-yearly basis, depending on how you want to pay for it, when such an incident happens, the rider takes over. Okay, so we exempt you from paying future premiums until the policy term comes to an end.
Maturity.
Yeah. And then we have what you call total and permanent disability. But this disability should have come as a result of an injury sustained through an accident. So you get an accident.
On your way to work.
Boda, motor car. Maybe I'm a painter and I was painting this beautiful room, then I fall down and my spinal cord is,
damaged.
Yeah, damaged. I'm no longer able to work. So I can no longer do what I used to do to earn me that income. So how does total and permanent disability work? It looks at what your sum assured is. The sum assured is your expected benefit at the end
of the
policy term. For example, if my sum assured is going to be 40 million, TPD gets 40 million, breaks it down into 36 equal monthly installments. Those are 3 years. Okay.
Wow.
So 3 years. So in 3 years, every month they'll be sending me that particular portion. They send it to me. Why? I transferred my risk from myself to my insurer. So much as I'm in the wheelchair, the pressure of having to think, what is my family going to eat? My child has to go to school. There is no school fees. Maybe if I had a business, the workers are looking at me. Remember, you're not yet gone. You haven't yet changed geography.
Yes.
You're still alive, but you're not able to do what you used to do. Okay, so TPD, 36 monthly installments. They send you that money on a monthly basis so that life continues. You don't have to become disabled and then they take you back to the village.
You keep on living.
You keep on living. You live free.
You've really protected yourself against uncertainty.
Yeah.
Oh, Violah, thank you very much. This has been very knowledge-packed. I think our viewers have picked a lot of stuff. We will be having Musomesa sit here again. She's our resident Musomesa. Violah, before we go, what would be your final, your parting inspirational words to our clients, especially around reading their policy terms?
Thank you.
Because this is where all the questions start from, not understanding your policy. Once someone reaches out to you and introduces you to life insurance policy, we have said it's very important to take a moment to understand what you're taking on. Yes. So
from a teacher's perspective,
Musomesa,
it's important to read.
Yes.
Read and understand. If you feel...
But there's that saying, tetusoma.
Tuyina okusoma. Okay? Tuyina okusoma. Because this involves your money.
Yes, your future.
Yeah, your future. You're planning something 10 years, 15 years. So you need to really understand what it is that you're getting yourself into. So if you've had an encounter maybe with our sales agent, or maybe you've gone to the bank with our bank partners,
Yes.
or it was an online engagement and so someone has interested you to buying one of our products, take time and read.
Understand.
Understand. We have literature all over on our website.
Yes.
You can even walk to Parliamentary Avenue.
Or even across the country.
In Masaka, in Gulu, in Bale, Jinja, Hoima, Barara. We have
Arua.
agency offices, Arua. Our officers are all over. They'll be ready to answer all the questions that you have. It's very important for you to read and understand. Okay, because the biggest challenge is for you not reading, and then you get to a time T and you want to take yourself back, which is not very possible.
The 30-day.
That 30-day, please utilize the 30-day free look period, read through, understand it. Once you have the physical document or even the online document, please read through. If there are any terms that you are not able to understand,
invest time in your long-term plan.
It's very important. It's very important. Our customer service center is open. They're always ready to take on calls. You can even walk there. They will take as much time as possible to let you understand the policy terms and conditions.
Yes. Thank you very much, Viola. It's been a great time having you here, and I know we will be hosting you time and again to handle different issues. The next time you're here, I want us to really expound on policy terms. We will try to break down what each parameter in the policy document means for our clients, so that they are not confused. They really know what they are getting into. So as a brand, we are very intentional about our customer experience. So we want to walk this journey with you without you feeling a certain way. True. But thank you very much, and have a great day.
Thank you too, Camilla.
Cheers. Bye.